Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodity, and or financial topics. So let's go dive in there, take a look, and see what people are sharing. If you want to follow me at Finance Square Finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, looking for potential investment opportunities, and I do touch on dividend investments and growth potential investments across the commodities space. So Reads with Ravi says, until you can manage your emotions, don't expect to manage money. Warren Buffett. And I've been there, guys. I've been there when I was a newer investor, and even somewhat gaining my experience where you flip flop back and forth trying to chase price because you have the fear of missing out, or you get doubtful if the price goes against you, and that's kind of, I would say, living in the moment. Living in the moment and using your emotions is exactly what you don't want to do. So you need to manage those emotions in the short term so you can look past the day-to-day market movements. And believe me, I've been there too. Back in the day, I would chase. I would sell because it's down, buy because it's up. You chase into something because it is moving on up, and you want to take part of the move going higher. When I became successful, I would do almost the opposite. I would wait until you have a good entry point. I would buy when no one was really looking at it, and when it was down. And I used patience for the sector to turn around and inflect into making money. And that's where your emotions can be very dangerous, because you're literally chasing your tail, selling when it's bad and buying when it's good, going in circles, chasing yourself, not making any money. And that's what he means by, until you can manage your emotions, don't expect to manage money, because you're just going to be chasing your tail, chasing gains and running away from losses. Jesse Felder says, today commodities are as undervalued relative to common equities as they ever been. All signs point to the early stages of a prolonged commodity bull market, likely stretching into the 2030s. And this is your commodity to Dow Jones ratio. And someone said and asked me during one of the question and answer sessions, are we early in this bull market? Well, we're way down here, guys. And that is the same situation as we were in the 60s down here. And I think that we're probably like right here. So you kind of come down and then you bottom, and you get this little kind of off the bottom move there. If you draw a line across, that is a shoulder, a head, and a shoulder. It's an inverted head and shoulders pattern that could potentially break up at any point in the commodity to Dow Jones ratio. If you were to take anything away from this chart, and this is a ratio chart, you want to be long equities here at the bottom. You want to be long commodities here at the bottom. Long equities as you get up here, so you accumulate equities at the top, and you want to make sure that you've got bottoming patterns along with that. It's not just that you get to an expensive state. You also want to see bottoming patterns in the individual companies that you're looking at. But 1982, right here, was the best, bar none, chance to buy equities. So is this. 1930s, 1982, these were bar none, by far the best time to buy equities. And here, you could say bar none, the best time to buy commodities when it was in the 60s here, before the big move into 1980 peak. We are bar none, probably, in my opinion, the best time to ever buy commodities. And some of the cheapest assets in the world at this exact moment are precious metals equities. They are cheaper now. The precious metal equities, you don't see it on this chart here, but there's other charts like the XAU to gold ratio, and if you compare it back all the way back, even into the 1900s, there's nothing out there as good as today, with the valuations as lopsided as they are for precious metals mining companies. So it's not knowing the future. It's about knowing the past and recognizing when something is very cheap. Then the question is, when it is cheap, when is it going to inflect and move to the upside? And precious metals right now look incredibly good. I also think oil looks incredibly good. And oil might not be coming into its prime move immediately. It might not. But precious metals have all the tailwinds behind it. The lowering of interest rates for the Fed funds rate, interest rates coming on back, and then we've got pretty good momentum on gold and silver breaking out of its pattern. Those all look pretty good. Oil is at a very cheap ratio. We're at gold to oil ratio of about 34 to 1. And that's historically a really cheap ratio. I mean, really, really cheap. So I think oil going forward, maybe not in the immediate future. We might have to go through a slowdown. We might not. It's difficult to read here. But over the longer term, it's a huge, huge setup in all of these different commodities. Triple Net Investor says, wow, AutoZone's rise has truly been spectacular. Their stock is trading near all-time highs and has 458 times since their IPO. They've defied gravity over the years, fighting off internet and retail giants like Amazon, Walmart, and Costco. What on earth is AutoZone doing right? I can tell you a couple things they're doing right. They've got a loaning tool program that you can go in there, and they get you in there because you can loan their tools. 2, they've got some stuff that they sell in the store, and a lot of it is a lifetime limited warranty. But when you're selling parts on old cars, the car generally dies at some point. So that warranty only lasts as long as you own the car and it's to that exact person. So if you don't own the car that long, you put the parts on it and you never really have to worry about the warranty. But they charge for that warranty in the price of those products. I'm kind of on the opposite end. I do use AutoZone and I do have some of the parts in my car. And I'm on the second alternator, second starter that they've got for my Honda Civic. So I had the original go out at about 100 and something thousand miles, 130, I think. I put a AutoZone starter on it. It's worked all the way to 215,000 miles, and I just put another one on it. And I put AutoZone half shafts on the front of the car and all that. And if something goes wrong, I can just turn it in and get a new one. No questions asked. I also have that on the RX-8 for my ignition coils that I swap. I swap ignition coils, and I only paid $100 for all 4. So AutoZone's cheap. They got that lifetime warranty that you can take advantage of. And they've also been buying back stock. That's how 458X, they take their free cash flow and their earnings, and they dump it back into shareholder returns. They are doing massive share buybacks through this entire thing. That's how you get the 450X. You know what I see in the markets today? Oil companies are very similar to this. They are starting to ramp production in some areas, good growth. They're going to pile back their earnings back into the shareholder returns of share buybacks. That's exactly what AutoZone had done to get this 450X return. If we get a huge bull market in oil, which I think is coming, and we can see that the commodity stock ratio is at these all-time lows, if some of these oil companies are as profitable as they are today, and they're going to start piling back all of their earnings and free cash flow into shareholder returns like share buybacks or dividends, I have a feeling that some of these companies are going to do over 100X from their bottoms of 2020. And hopefully I'm in a whole bunch of them. But I think we have great opportunities ahead of us for companies that are going to be very shareholder friendly, just like AutoZone here, as an example. Son of a beach on, it says cyclicals never bottom at, hey, this stock is kind of cheap. They bottom like, what the hell is this company and why is it trading like it's going to zero? And that's the sentiment at the bottom. So look for that sentiment and identify it, is what I'll say. And I can feel that it's kind of like that in uranium right now. And uranium could still go down a little bit, but the sentiment is pretty crap in some of these areas. And that's exactly where you want to be. You want to be buying where the sentiment is just blowing out bad. Here's Don Verrett. I thought this was a really funny one. He goes, I'm bullish silver, but this guy takes it to a new level. And I think this name's Ed, and Ed Steer. He says, you won't be able to buy silver with dollars. That's, Don's a pretty big bullish. He's pretty bullish on silver. So am I. But yeah, this is another level. You won't be able to buy it with dollars. There's going to be no price. I think that's kind of funny. Here's JH. It says the Libyan oil export port of Hariga has stopped operating due to insufficient crude supplies. Exports from there stopped following the near total shutdown of the Sarir oil field, the port's main supplier. Sarir normally produces about 209,000 barrels per day, routers on Saturday. So Libyan crude oil exports are facing force majeure as port stock runs out. This is different from the Middle East headlines because it is real barrel loss. It will further tighten an already tight Atlantic light sweet crude and move the sweet-sour spread. How long do you think prices will be able to ignore reality? So this is Libyan exports literally coming to a halt in some of these ports. This is going to definitely have an impact on the physical barrels in the market. So I think price is going to go up. Charlie Munger says, on one of the dumbest investment decisions that he ever made. I wanted to know what is some of the dumbest decisions that Charlie Munger has ever made. So this is his dumbest decision. Let's read it together here real quick. Let me move this down just a little bit so you can read that first sentence there. It says, let's take a simple question. As I said in that book, they offered me 300 shares of Belridge Oil, which I bought because I had the money on hand. Then they offered 1,500 more at the same price. And now I had to sell something or borrow the money to buy those shares. So I bought the 300, but not the 1,500. Well, that decision has cost me now about $5 billion. I'd be $5 billion richer if I had bought the other $1,500 shares. It's the contrast. It didn't inconvenience me in any way to buy the 300, and it inconvenienced me by having to sell something to buy the other 1,500. Just the extra contrast made my judgment go sour. It was the dumbest goddamn decision, one of the dumbest investment decisions I have ever made in my whole life. And it just came from the stock was not overpriced because it was a little more inconvenient for me to buy it. But the inconvenience was enough to trigger my mind. And there was another problem on that which was even worse. The man who dominated that corporation was eccentric and heavy drinking, but the oil field wasn't drinking. Laughs. Anyway, so I had two different psychological reasons for why I made the wrong decision. I thought too much about how much the man was drinking and too little about how good the oil field was. He laughs. And then I thought too much about my own inconvenience and too little about the basic situation. So I screwed up fairly well. But that should encourage you people. You can blow one of the major opportunities of your life and still muddle through all right. So that was his biggest or dumbest investment decision, is not basically buying as much as he could in Belridge Oil. And we're in that same situation right now. We've got a bunch of oil companies that are incredibly cheap. They are just going through coming and inflecting into positive earnings. And a lot of these companies have huge growth, huge free cash flow growth. We've got good opportunity for oil to go up, and they're going to start buying back shares and paying dividends. And then on top of it, the chance for special dividends. I love it, guys. I love this situation. Absolutely love it. Warren Buffett says, when the rest of the world is fearful, we'll grab all of the opportunities that we can handle and not lose a day of sleep. And that's where you need to get. You cannot be emotional. You got to be logical and not be emotional, because if you're emotional, you're going to be sucked up in all of that selling pressure. You got to take the opposite stance. I wanted to read this. This is about Bitcoin. A little bit of a read, not too long, but I agree with it. And this is one of the reasons why I don't invest in Bitcoin. He says, thanks. The reality is that any cryptocurrency that isn't backed by tangible assets is just another bullcrap scam of a currency. It's not the cure for our fiat problems. 5% of Bitcoin owners own 62% of the coins. So the rest of the world should just make them rich. Totally ridiculous. I honestly can't believe people are that dumb as to think these moron coins have any actual value. The reason people like them is that they like the story. They like the story where they can get to buy some coins and then get rich as a result. There's two types of people that buy cryptocurrencies. One, those that think it's a game and believe if they buy now, other idiots will pay more later. Or two, those that are dumb and have no clue about the real future. Fiat currencies are underpinned with value because of taxation. The answer to avoiding getting hurt by inflation is buying real assets and investing wisely. The answer to dealing with huge disparities in society is to organize and vote for progressive fair taxation. Silver will prove to be a far better store of value than laying claim to some crypto coin digits in a bankrupt ecosystem. Silver has real uses and will always have piles of real uses. It will always have a base value related to the energy that it takes to make it. My upcoming book, I talk about my style of investing, which could be called the intrinsic energy principle of investing. I totally agree with this. And people don't want Bitcoin because of Bitcoin. What do all Bitcoin people or cryptocurrency people talk about? They talk about how it's going to go up and make them rich because that's all it has. No one talks about how great cryptocurrency is because they can sidetrack and make transactions at a cheaper price. I don't hear anything about that. When you ask Bitcoin owners, why do you own Bitcoin? Oh, it's because it's going to the moon. And almost all of them say that more people are going to adopt it. Why? So if I am not going to adopt it, I'm just giving my one example. I don't want to adopt it because I don't want to enrich the people who already own it. And I know that the people who own it, they don't buy Bitcoin because they want to transact in Bitcoin. They buy Bitcoin because they think they're going to get rich. And when people get rich, they don't want to own Bitcoin. What they want to own is they want to own the things that Bitcoin can buy. So I buy the things that Bitcoin and the owners want to buy. I want to own silver because they want to buy computers or TVs or something that is made with silver in it, or oil, because oil's in all of that stuff. It's in the plastics, it's in the transportation, and it's all those things. So what's more valuable? The thing that people want to try to get rich off of and buy physical things in the world, or the physical things in the world that basically are the basis of wealth. I want to buy the things that create wealth, not the things that people think you can get rich off just because it's going to go up in price and has no real tangible value. That's me. The Grant Marty, S&P 500. He's got 2008 overlaid on the 2024 fractal. They look pretty close. Is it the same? I don't know. But I would assume that it could be the same and that we could get a pullback in the NASDAQ and S&P 500. I still think that is a very, it's a very good likelihood in that. And that's not just the patterns, it's the yield curve uninverting and all that stuff. Unemployment rate going up. Here's Grady on GDXJ. It says that one is pretty clear chart, so it begins. And this is GDXJ, the miners breaking out and doing a back test. You guys know what I do with back tests. I buy them. I'm already positioned for all these. I'm just waiting for it to basically materialize. Gold and silver have both broken out hugely and resumed their bull markets. That is all we need to know. Do not sweat the small wiggles now. Get prepared in every possible way instead. You have to believe in the bull to really profit from it, and you only have one chance. So the breakout in silver and the breakout in gold, and here we are ready to go, and we got the breakout in GDXJ. It's all ready to go, boys. And that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. Mayday coupon code still active if you like to. And that's all I've got. So we'll catch you next time. This is Finding Value.